Hi there, good morning and welcome to the trade setup right here on BloombergQuint Live. I'm Neeraj Shah, and you have to say that you have to trade with a bit of caution. I think that's the primary word. Now, let's try and tell you all that will impact trade today or the near term. First, globally, yesterday we were talking about how trade was important simply because a bunch of US heavyweights are going to come out of the results. Let's stick with this chart. Mind you, post-market hours, US market hours, Apple came out with good numbers but warned off slowing sales. Microsoft, on the other hand, came out with good results and good guidance. So mixed bag out there for the big tech, but there was a corrective move that had happened ahead of that. So a bit of a soft stance, if you will, for the US markets. Now, and I'll tell you why in the trade setup in a bit, but I would just first want to show you the effect of what's happening because the Chinese tech regulator knocked down. So what's happening because of the China's tech crackdown is that a bunch of Chinese exposed themes in the Hang Seng or in the US are showing some very deep corrective moves. Look at this. This is the Dragon China Index. And in a span of 3 trading days, this Golden Dragon China Index is the NASDAQ Golden Dragon China Index. It tracks about 98% of China's biggest firms listed in the US. It's plunged more than 19%. I mean, this is a big move. In the last 2 days, it's been the sharpest breakdown that this index has seen in its history, right? It's been in existence since a long time, and in a 3-day period, it's the biggest since history. 2 days, largest 2-day drop since 2008, various statistics thrown out there. And there is enough and more material on social media, viewers, for you to gobble on if you want to know why is China doing this. I'm not an expert, so I can't even tell you really because I can't differentiate between one and the other about what could the reasons be. It's political, it's geopolitical, it's maybe great for the populace, you don't know. So multiple theories out there. What I'm effectively interested in is telling you what the market impact of this is. And clearly the market impact is there for all of us to see. There's a bit of a problem there. Is it impacting Asia today? I would reckon it would be. So there should be a gash of red. Hang Seng, interestingly, is flattish, but the rest of the pack is marginally in the red. No deep shake-offs. The US futures are fairly flattish. But I reckon that the SGX Nifty would be indicating that we'll start off in the red, and it shouldn't surprise anybody that we will start off marginally in the red. If we do in the green, well, actually the SGX is indicating that we're going to start in the green, which is probably not a bad thing. Let's see what's leading to this. It might be interesting to see, could pharma make a small comeback of sort, though it doesn't impact the Nifty too much? Or is it that banks will continue to do reasonably okay? Remember, yesterday HDFC Bank, for example, was doing reasonably okay. Actually, speaking of yesterday's trade, can we have the MOV function out there? And you will see that the market breadth was terrible. Yesterday, portfolios bled. Irrespective of what happened to some of the other large caps, portfolios did bleed. There were individual names. The coffee companies, for example, CCL Products and Tata Coffee did really well. But some of the others, no, not really. By the way, just a small update for all of you who might have traded CCL Products. It is purely a converter. CCL Products does not benefit if coffee prices move up, and CCL Products does not get impacted negatively if coffee prices move down. It's been told by the management enough number of times, but people still trade it. I'm just telling you, just so that you know, that CCL Products doesn't get impacted. APL Apollo because of the UBS note, or some of the KPR Mills because of strong results, all of those did well. On the flip side, pharma took a bloodbath. Alembic, Dr. Reddy's, Glenmark Pharma, Sun Pharma, Ramco Cements because of poor numbers, Aurobindo, Lupin. So that tells you a story. Could this make a bit of a comeback? Never know. I mean, let's look at the trade setup according to me. So what I think the Chinese crackdown scare is a real and present danger for world markets. Keep in mind, viewers, if flows for EM dedicated funds come under pressure, the redemptions don't only happen from one market, which is Hang Seng. It could happen from all EM markets, and therefore India could hurt as well. Keep in mind, the exposure is so large that about $1 billion of outflows, if they happen, could impact India too. I think, as per what dealers as per what dealers say, pharma sell-off could continue for some more time. I am actually of the opinion that maybe we could see a bit of an arresting of the fall if there is a if there's some more pullback today or some more correction today, but dealers tell me that this could continue for some more time. So I'm inclined to get you all the views. What I think is that the soft commodity backed stocks could continue to gain preference. Sugar, coffee, what have you. I mean, just keep on monitoring that market. And a bunch of results today as well. On the Nifty front, 3 names. So Maruti, Nestle, United Breweries. And then the others. So Coforge, very strong stock in the recent times, needs to deliver. Happiest Minds, very strong stock, needs to deliver. Birlasoft, again, a reasonably strong stock, needs to deliver for sure, as does Root Mobile, by the way. And then in between that, Tata Coffee, well, again, I can use the same thing. Very strong stock, needs to deliver. And Wellspun India, aside of the results, the commentary of the management would be very, very important for a move that the EU has done, which I'll come to at the fag end of the trade setup today. So these are the results that one should keep in mind. Now, what are the stocks to monitor in the session today? Well, firstly, Interglobe Aviation, top of my pack, and for multiple reasons. Firstly, the results. So revenues down 52%, but at 3,006 crores, the estimates were 3,190. So the revenues were okay, almost in line, I would say. About 150 crore miss or 180 crore miss, which is, well, there, but not too much, 6% miss. So low, below estimates for sure. But the net loss, the widest net loss in its history, and the estimates were 2,000 crore loss. They've come in at 3,179 crore loss. EBITDA loss of 1,400 crores. The estimates were about 214 crore EBITDA loss. So not the best of quarters. Interestingly, brokerages have a different take here, and I'm getting you the Goldman Sachs take. They are saying that they call us a buy with a target price of 1,850. They've cut the FY22 estimates meaningfully. But they say that the market focus will remain on sustaining operations in FY22 and earnings growth in FY23. So they're saying that the markets will start looking at FY23 earnings growth because FY22 will be believed to be a year of sustenance. They believe Indigo stands out versus competition, and they believe that the company would launch its 3,000 crore QIP sooner rather than later, given the cash burn during the quarter. So QIP in the offing, the target price is higher. Market, according to them, will look at FY23. Multiple reasons why they believe Indigo is a buy as per them. Some of the others too have said a buy. So it's an interesting take. My belief is that the stock would start with a corrective move, but you never know. I'm generally telling you what experts are suggesting, and they track Indigo much more closely than what I do. But let's wait and watch. Goldman Sachs, I bring you the IndusInd Bank view as with the results came in post-market hours and the numbers seemed okay. So the GS report encapsulates it very well. I'm not biased towards Goldman Sachs, just that today I thought these 2 notes stood out. So even on IndusInd Bank, they maintain a buy with a target price of 1,222. They're saying reported healthy results with core PPOP growth of 26%, which was 3% above their estimates. Strong bottom line with PAT 65% ahead of their estimates despite elevated credit costs. They believe the bank is well positioned in certain businesses such as commercial retail, and the leadership position in commercial retail will allow it to bounce back relatively quickly as the recovery begins. So do watch out. IndusInd Bank could actually have a half decent day today. Dalmia Bharat, I'm unsure as to what kind of day it can have. Remember, Ramco had a tough outing post slightly weak numbers. I thought Dalmia's numbers, revenues, EBITDA, volume, and realizations were all below estimates. You could argue, as the press release says, that on a YOY basis, the company's done really well. But YOY, most companies would. Look at compared to estimates, revenues down 17%. This is all compared to estimates, by the way. EBITDA down 8.3%, PAT down 56%. So it didn't look all that great, the numbers. I'll be surprised if it starts off well, but surprises do happen. But yeah, I would suspect that maybe there could be a bit of a corrective move. Just look at the last 4-5 day performance as well, if you indeed decide to trade Dalmia Bharat. Some other numbers that everybody should keep in mind. IIFL Finance, I thought the numbers were pretty strong. The ROEs were maintained at 20% while keeping NPAs under control at 2%. So you could argue that the actual broad brush numbers were not very high, but I think the internals look very good. So watch out for IIFL Finance, watch out for Karnataka Bank as well. The numbers seemed okay. Again, the headline numbers were lower, but it was a strong performance. Delinquencies have most likely be lower. The con call will give more details. It's a small bank, but I thought the numbers were good and it could stand out. Again, Godavari Power, very good numbers. best ever quarterly EBITDA put up, PAT up 39% quarter on quarter. Well, you couldn't find a fault with this one. So let's see if this one has a positive reaction. And RT Drugs, I thought the numbers were very weak. The raw material costs shot up. PAT was dragged down as a result of that, even though the top line numbers were not as weak. And pharma is not in the best of shapes. Maybe this one could get punished. Let's wait and watch. At least I think that the numbers were not the best, and maybe the stock could show a bit of a reaction there. Now, what I was telling you, two things. So one, Wellspun India should be in focus for more reasons than one, because of an update that has happened that the EU has removed Pakistan's GSP status, and some analysts believe that this is a big positive simply because earlier Pakistan had zero import duties. So Pakistan exports home textiles had zero import duties in the EU. So Indian textile exporters in the US have a very large market share. I was reading this analyst report. But in the EU, because they couldn't compete because Pakistan had this preference of zero import duties. Now that it has been removed, the perception would be that it will benefit Indian suppliers. It could well benefit other suppliers as well. But I'm just saying the perception is that Indian textile exporters who are very strong per se could actually have some benefits here, which is why I was saying that Wellspun India numbers and commentary would be important. We'll try and get the management tomorrow to talk about what this means, but it could be very interesting. Watch out for all of those. So Wellspun, maybe an Alok, and some of the other textile companies, they may not be direct exporters, but they may be suppliers to exporters, and therefore if demand goes up, their supplies could also go up. I mean, some of these companies have had a heady run, Vardhaman, etc., for example. Big moves have happened in the recent past because of a variety of factors. But textiles seem to be spinning a good story. So do watch out for this space. Could be a one to watch out for. Again, soft commodities here, cotton, etc. All of those yarn companies could well be pretty interesting stocks to monitor. Last but not the least, one brokerage note that stood out for me today was Morgan Stanley on DLF. Almost every Jefferies also has raised the target price, but Morgan Stanley has rating overweight. The target price has been raised to 399. I think Jefferies revised its target price to 394. What Morgan Stanley is saying is that DLF has started to show consistency in key deliverables of pre-sales and deleveraging. Remember yesterday I spoke about how third consistent quarter of 1,000 crores of sales bookings. It's gross 1,000, in each. That's what Morgan Stanley is saying, and they've reduced the debt for the last 5 quarters, and gross sales about over 1,000 crores for each of the last 3 quarters. It should benefit from the upcoming residential cycle with a deep launch pipeline. Do watch out for DLF. I reckon viewers do watch out for all realty stocks. Could be very interesting. So net, be prepared of any extraneous shocks because of the Chinese crackdown on tech to have collateral damage on Indian equities as well. That could happen anytime. So please be mindful of that, viewers. Don't be under this belief that it's bad for China, but it's great for India. Eventually, it could be for some of the companies, as I said, for Zomato and some of the others, but it could have collateral damage on the markets at large if there are redemption pressures faced by EM dedicated funds. Today, watch out for soft commodities, watch out for textiles. Metals maybe continue to shine. They did really well yesterday. I'm glad we got that call right. And some of the small results that I spoke about today, the IIFL Finances, Karnataka Banks, Godavari Powers, could be interesting names. Thanks so much for tuning in. Stay safe. If you're stepping out, please stay masked up.